We're looking at a daily chart of the Nasdaq, and you can see today that it lost 156 points or 1.16%, and it's been down 5 out of the last 6 sessions, and so we're at the start of this correction here. You can see that first day it went up and then reversed and have that inverted hammer candle, and it's led to more downside. And today another inverted hammer candle, which just means that it closed at the low of the day. So, probably more downside ahead. I just wanted to point out here, it's now 1.1% below this green line here, which is the 10 EMA. And it's just barely above the 21, 0.3%. And also 5% below the 50 simple moving average. It could definitely take a trip down there. Something to be aware of, and you have to have a game plan when stocks go up, and you have to have a game plan when they go down. I just wanted to point out here that during January to February 2nd run, it had gone up 16% and then pulled back February 2 to March 13th, 8%. So it gave away, half of that gain. It retraced half of the move. Now, this is a 23% move from March 13th to June 15th, maybe, I guess, something like that. And then the last 5 of the last 6 sessions, it's been down 3.25%. And so for it to go back, it would have to retrace 50% of the move. It'd be 11%. So that means it's got, a little ways to go. And you just got to respect the risk. That's all. I mean, I have no idea if it's going to pull back, 11% of this move. I have no idea. It could get support at the 21 and bounce higher. It could pull back to its 50 and just trade sideways. It's still a stock picker's market, but on the way down, what I suggested was to buy some of the SQQQ, and people looked at me like I was giving them a trigonometry or a calculus problem. Like, what's wrong with you? It's too soon for that. But it's just to mitigate your losses. If you're holding on to stocks like Tesla and NVDA and SMCI and they're correcting, you want to mitigate some of the loss. You can just hedge it with this. It was up 4% today. And you can also just hold on to NVIDIA and Tesla and hope that they rebound and correct and can go higher eventually. Longer term, think you'll be fine, but this is just short-term, real short-term thinking here with a hedge. Anyway, that's enough of that stuff. I'm going to go to a few stocks here. I'm going to have actual theme here because the home builders are still strong. We saw profit taking in some of those high-flying tech names in the home builders. Pulte made a new high today and just pulled back near the close with the general market weakness. Meritage, similar. Close near the lows with the general market weakness. It did make a new high and then pulled back. So also DR Horton, another home builder, made a new high, then closed lower with the general pullback in the markets. And Builders First Source made a new high and actually had a 0.5% gain today. So the leader in this space has been Green Brick Partners, and this one pulled back to its 21 today. And there you see the inverted hammer candle closing at the lows of the day, 6th percentile. Anyway, the home builders are, there's a lot of profits to be taken there. They've had nice runs. And so I'm going to move on to the semiconductors. Speaking of profit taking, these ones have had huge runs. And, this is NVIDIA. And it's seen some profit taking here the last 4 sessions. It's been lower. Today it was on higher volume, pulled back and closed just above its 21 there, 2.6%, and a rising 21, a fast rising 21 EMA. So we'll see what happens, see if it can find support there, if it wants to head lower. That's a heck of a gap to fill right there at 306. That's only a 100-point move. So you just got to protect yourself and be careful out there because the market is correcting. These growth stocks are going to correct 2, 3, 4, 5 times the index. And so there's going to be some pain here as profit is being taken. This is opposite of the window dressing, what you hear about portfolio managers buying stocks to have on their books at the end of the quarter. Well, that's not happening here. We're just seeing some profits being taken. This is AMD, and I talked about the gap fills. This is one of them. It filled the gaps from May 24th at 108.91. It did that last week, and today, just closed at the lows. There's no momentum here. You can see it's been down about 7 straight sessions. So AMD looks kind of rough there. But this is what it does, it breaks out and then pulls back to its trigger point. It broke out, now it's pulled back to its trigger point, gives you another chance to get in if you missed out on the first move. And that's what, this correction should do, give you an opportunity to get in stocks that you want. So you need to embrace them. If you miss the rally and you're, holding out, thinking there's going to be a recession or talking about an inverted yield curve or whatever reason you missed it, now's a chance you can get in some of these winning stocks. You just got to watch them, have your list ready. This is MRVL, just pulled back to the 21, flat on the session. Doing nothing wrong. We have AEHR on our watch list today. This one, it ran right up the right side of its base here. So, and the depth was, over 40%. So those are more prone to fail. But this thing is pretty wild, and it's going to shake some people out. It's not going to be an easy hold. I would still be watching this one as it undercut the 21 today, and it goes wild in both directions, as you can see by these movements here. That's enough for the semis. Man, the REITs were up today, and if the REITs were up, it's not good for growth stocks. Realty income up 2%. EPR properties up more than 2%. Maine, these are monthly paying dividend stocks, and investors selling out, taking profits on the growth stocks and buying some more defensive names. Speaking of which, the oil stocks have got to come back. I thought I was out. They're trying to pull me back in, but it's not going to happen. This is Chevron. It's trading below all moving averages, not interested, but they had a good day today. So what the heck? This is giving me flashbacks to 2022. I want no part of it. This is Warren Buffett stock, Occidental Petroleum, up 2%. It's just bouncing off, lows here. As you can see, it's touched down here, but not the 55 area several times. What's the other one? Oh, Weatherford, another one, had a nice day today, but a little stronger than those other ones for sure, as it's above moving averages. And so is Tidewater, another one that just looks like it's basing. This is a field services stock. But I tell you, I'm not interested in that. What I am interested in is stocks like Tesla. Talked about the these gaps here. Gaps get filled, folks. This gap is at 235.23, and the low today was if I can get on it, that'd be great. 240.70. It's only $5 away, and that coincides with its 50 simple moving average. 50, the 21, which is a 236.50, a fast rising 21. So I wouldn't be surprised to see this thing come back, fill the gap, and then move back up. Tesla's definitely stock in demand. It was just downgraded today by Goldman Sachs, so the downgrade worked. SuperMicro computers, man, I hear so many theories about this stock. There's people are saying that it's got this head and shoulders, action. Others would say, it's a high tight flag action. To me, it's a very perplexing stock, but I think eventually fundamentals, went out, and this stock is relatively cheap compared to its peers. You can see it's got excellent cash flow, return on equity, very little debt, and it's going to earn $11 this year, so it's not an expensive stock at all. The PE ratio is 20. Well, I know you don't, we evaluate growth stocks by growth, but if they come out and they beat earnings and raise guidance, this thing's going to rocket again. If they don't, it won't. It'll falter and it'll be done. It'll be a climax top, and it'll pull back, and it'll be over. So one or the other here, somebody's going to be right. I'm interested in being in on this one because it has the makings of a monster stock. It already has been, really. You could see in 2022 when the Nasdaq was floundering, this thing was making new highs all year. And then we got into 2023 and it's just been a monster. So I'm definitely interested in stocks like that. ELF, the same thing. This one, throughout 2022, it was just making new highs and grinding higher. It sold off the first few days of January, profit taking. The tax, people worried about the tax man sell it at the beginning of the year, so they have to pay for the prior year. And it just continues to make new highs. It was kind of a stair stepper stock, which means that it just kind of goes up, goes flat, goes up, goes flat. And usually it's going up on earnings, every 3 months it gets the data, but it's just right now, getting supported by its moving averages, and ELF looks fine to me, is barely down today, less than 1%, less than the Nasdaq for sure. Celsius is another one that I like. If it's during a general market weakness on pullbacks, you can tell the strong stocks. They're showing relative strength here, and this is Celsius down, nearly 2% today, but still trading above its 10 EMA, and that one's showing strength as well. So if you want to get in, it had the buy point here at 122. It ran up to 138, gave you another chance to give in at 122. And if you miss both of those chances there, you can't chase. You can't chase. If you miss that, you can't be buying up here, because you're going to get shaken out. Just a garden variety pullback to the 21. You're going to be down 6, 7, 8%. You're going to say, I'm out of here. So you just got to be patient and wait. I doubt if it's going to set up like this again. It's probably going to pull back or form a 3 weeks tight or something like that, an add-on buy point. But definitely one to watch. Speaking of 3 weeks tight, this is CMG, which is Chipotle Mexican Grill, and you can see this thing's been trading tight for a while. Wow. Yeah, flat base pattern, I'll say. So it just gapped up on earnings and it's just gone sideways. So you could say that investors are, willing to pay, that price. They're not selling it, they're not buying it. And you could see that the 10 and the 21 have converged here, and the 50 is catching up. So definitely something to watch. And the last one I'm going to cover is just the IPO stock that came out. Piqued my interest, had a nice IPO launch, and our friend Greg Morton's getting excited because there's more IPOs coming out, which means that the market's a little healthier, and folks are willing to take a chance and bring new merchandise to market, which is always exciting. This one undercut its IPO lows on the very first day, formed this IPO base, and I want to see what day this was. It was sometime in the end of May. Yeah, May 26th. Okay, so it's been a month, and today it broke out above that IPO base level there of 2250 and closed at 2297. So good for Atmos Filtration Techs, which is an auto truck original equipment manufacturer. Anyway, that's it for today. Embrace the pullbacks, get your watch list ready. Don't have 40 stocks to watch, just get 5 or 6 that you really want to own, and strike like a cobra when they come down to their moving averages. We never give up.